So welcome everybody to another live Q&A session with Restaurant Collective. And today we are with Alison Wong from White Doe. And today we're going to talk about how to write an effective business plan for hospitality, take advantage of government grants, and we've got a little bit more to cover as well. So welcome again. And I wanted to do a little bit of housekeeping. So just cameras off and everybody muted, please. So we could, because we're recording the event, so we have this on YouTube for later. And if you have any questions, please feel free to share it in the chat. I will be looking at that towards the end. So if you have anything you'd like to ask Alison, or even myself, please feel free. So Restaurant Collective is actually bringing you this live Q&A. And what we are is a group that wants to champion, support, and connect the independent hospitality community. And we definitely think that more voices is better than just one. And we're stronger together. And at the moment, we offer a community hub where you can come and talk to your peers about any particular issues you may be having. We offer weekly hospitality concise COVID updates. We are offering also single page websites to our members, which means it's a very handy place to put in all your information and have it concise over all the platforms. We are in the process of building a knowledge base for our members, and Allison is kindly providing us with some information, financial information there for us. And we're growing every day. We're listening to our members and providing exactly what they ask us to provide. So the help that we can give, we're listening and we're growing as well. So today we've got Alison Wong. Do you mind giving us a little bit of a background on yourself, please?
Yeah, of course. So I'm Alison. I run a company called White Doe. White Doe provides part-time, really flexible ad hoc finance director, CFO services specifically for the hospitality industry. So my goal is to support independent small hospitality businesses in their growth journey, basically. In terms of my personal background, I am a chartered accountant. I worked for Deloitte for many years, and then realized that I wasn't made for the corporate world, and gradually started working with kind of increasingly smaller hospitality businesses, from Virgin to most recently Right and Bell Limited, which is an Aviva-backed company. I helped them grow from 1 to 5 sites. And then decided that I would start my own business to help even more people. So that's a bit about me.
That's incredible. We're so happy that you ventured out and are now working with us as well. We're really excited about that. So I have a few questions for you, surprisingly.
Tell me everything.
So I wanted to start off with, do you have any advice for hospitality operators while they're writing a business plan?
Yes. Lots of people, I think, at the moment are writing business plans for many reasons, whether that's to do with loan applications, or whether that's to do with expansion or wanting to seek funding from investors, etc. So, also people who are just starting out who might just want to start their business for the first time as well. And my number one top tip is to know your audience. If you understand the motivation of your audience, you can just be really, really targeted and be super clear to them and prove it to them within your business plan how you're going to satisfy their motivation. So what I'm talking about is, if you're going to look for loan funding, for example, really the way the bank makes money is by getting interest from giving you the loan. That's their form of sales, right? So what you want to be able to do is show them that you're a really good bet, and under any circumstances, or bar, say, another pandemic, you're going to be able to pay the loan back really quickly, or in the timeline that you're suggesting to them that they could bring. So that's kind of thing number one. You know, if you're talking to an investor, for example, you want to be a bit more optimistic, because, you know, an investor is looking for an ultimate return rather than just being able to get back the money they lent you, for example. So that is my number one top tip. Next is probably be realistic about it, but optimistic. You know, there are so many stories out there in terms of business plans, you know, people going, oh, we're going to be the next Facebook, you know, whatever it might be. There are only so many Facebooks out there, you know, that is, you know, that's 1 in a million. You know, for every Facebook there are hundreds, millions, if not millions of other businesses that don't do as well. You know, so what you want to show to your audience is, given a fair wind, how will you do? You want to be a bit more optimistic if you're talking to an investor, but, you know, just be very realistic and show every different scenario if you're talking to a loan provider, for example. And the last thing I would say is keep the detail in the background. You need to have it. It's really important to have that, because you're going to be challenged on assumptions on how you arrived at all of the numbers that you've put into your business plan. But really, as a starting position, you just want to say, this is my overview of what my business plan is going to look like, and here's exactly why we are a good bet based on your audience. So that's a quick whistle stop tour on what I think my kind of couple of top tips really.
It's really interesting. Know your audience. I think that is applicable across so many fields, but sometimes you don't think about it in a finance. You think, okay, well, they all kind of do the same thing. No, you need to kind of apply the right kind of tone of voice and the right message. And it's interesting also the optimism that you need to have, instead of just being kind of point blank, this is what I want to do. So kind of creating a narrative in a sense, depending on who you're speaking to, is really important. So audience, so don't just make one business plan. Maybe make a couple, depending on, a bit like a CV. You
Exactly.
yeah, you cater your CV for all of a sudden you just have loads of experience doing something else. No, I'm joking. But okay, so knowing your audience is the key, and not just kind of doing a blanket business plan. Make sure it's curated for the audience. Okay, thank you. Oh, this is the wrong presentation. Excuse me. No, this is the right presentation. I just left in a slide. Present. There we go. Okay, so I had seen on social media that you're doing a reopening checklist for hospitality, as hospitality finally is reopening. I'm so excited about this, and I'm so tired of my own cooking that it's a blessing. Is there anything that operators should be looking at now that they've opened?
The first thing I would say is be kind to yourself. It's, you know, they've only just reopened, there's still restrictions in place, and until very recently it's very much, you know, outdoor dining only, which means you've got less capacity. But even now with indoor dining, you've still got less capacity than normal because of social distancing, because of all the rules that are in place, because of restrictions in terms of the number of people who can, you know, 2 households, rule of 6, whatever that might be. So, you know, be kind to yourself. That's thing one. Thing two is don't get too excited about like for likes. You know, operators, you know, once you've run a business for a couple of years, that's very much the target. You know, it's always beating your like for likes. You know, obviously at this point we don't really have like for likes, because this time last year you know, everyone was shut. But you know, even if you look at 2 years ago, it's not a comparable environment. You know, you're not comparing apples with apples. You know, you're currently comparing apples with really a pork sausage. So, don't do that. That's kind of thing one. Thing two is just make sure you are 100% sure that you are, if you're losing money, that's okay in the short term, but make sure you're losing less money open than you would be if you were shut. So that's kind of the non-negotiable factor, really. And in terms of doing that, it's all about, other than that, really, it's all about looking at all the different nooks and crannies to minimize your losses and maximize your profits. So keep an eye on your opening times, make sure they're right, and it's again, it's drilling down to the granular detail to understand whether or not, on a Monday morning, if you open for breakfast, whether or not it makes sense for you to open, or whether or not it actually makes more sense for you to be shut based on the demand there is at the moment. Keep an eye out on your labor cost. If you're used to putting 3 people on a Saturday night, do you need 3 people? Or actually, do you need 4 people because there are extra COVID checks, etc., to be able to maximize those sales for you? And really, I would say now more than ever, the market and how guests are behaving is changing all the time as people build confidence, as people get vaccinated, as various different things happen in the media. So it's important to have a set of things that you look at every single week to make sure you're consistently making the right decisions for your business. So decide on a list of key performance indicators, KPIs, whatever you want to call it, that works for your business, and just keep a track of it week in, week out, and make it easy for yourself. Don't make it too complicated. Know exactly how you're going to get it, where you're going to get it from, and just keep an eye on it every week so you can react to it very quickly. The worst thing you can do is wait 4 weeks before you do something else, and actually to find out you've been losing money for 4 weeks. None of us can afford that right now. So it's about doing things frequently, but keeping it simple.
That's really interesting. I mean, as you said, obviously, if you say, okay, I'll give it a month, let's see what's happened, then you could have been kind of maximizing your profit somewhere else for a month. So, for example, as you said, opening for breakfast on a Monday morning might not be as viable as 2 years ago, for example. So, I mean, I can give the example of the city. In the city at the moment, everything is dead. And, people who used to thrive on maybe dinner services are only usually now trading during the day, or maybe they're trading only in the evening. So saving a little bit of money here and there by doing these weekly checks is very, very good advice. And
I think,
also,
go on.
go ahead.
I was just going to say, and I think there are things that you would check in on once a month, and there are things that you would check in on once a week. So, it's kind of picking out those really easy wins every week, and then once a month going in deep to find the extra bits. There are things that won't come through for a couple of weeks yet. Of course there won't, but whatever you can do as quickly as possible.
Okay, so having maybe some weekly KPIs and then monthly kind of deeper KPIs. And then I think also in the months you can see trends as well. I think in a week it's quite difficult. And as you said, so many people are getting vaccinated, and maybe they feel comfortable starting to go into work or starting to, see friends out. So things are changing so rapidly that the case of doing things monthly might be a little bit, how would you say, a little bit too late. So
Yes.
no, absolutely, weekly is great. Thank you for that. When it comes to government funding, now with COVID having been around, there have been so many new grants and so many things the government have or haven't offered. How can operators apply for these with a higher success rate? I mean, a lot of people are having issues securing this funding. Is there some advice you can give on that?
Yeah, so the first thing I would say is check your local council website. What appears to be very different is that every local council has a different way in which you need to apply for the funding, and a different set of funding as well. So there are a couple of grants which are standard across the board, particularly if you're in England. I'm less familiar with the grants in Scotland and Wales, if I'm completely honest. But again, the local council, the local government will have all of the information. But things like the closure grants, which was applicable to everyone whilst we were locked down, restart grants, etc. So long as you have a rateable value, those should be automatically given to you. And there are a couple of other smaller criteria, but they're all kind of to do with whether or not you're trading as of certain dates, whether or not you have had so many grants that you've gone over a certain threshold, or whether or not you are a company in difficulty as of the date of you making the grant application. But most of those are just a matter of putting in the application, and the hardest part of it is actually finding all of those grants that you're entitled to be able to put in the application at the right time, in the right place, give the appropriate information to get that in. What there is also a lot of out there is every local council has been given a pot of money as a discretionary fund, but every council is splitting that discretionary fund in a totally different way. So for some councils, they're focusing on businesses that don't have a rateable value. So businesses that share, that don't pay business rates, for example, to support hospitality businesses in that way. Others are doing it based on need, which means it does require a proper application to show, your forecasts, your historic trading, etc. And some, there are lots of different criteria depending on it. So what you are entitled to will entirely depend on where you are, who your local council is, and your business circumstances, basically. And where there are discretionary grants, I would say actually the advice is very similar to what we were talking about at the start, which is the business plan is keeping it simple, being realistic, knowing your audience. So your audience is going to be a local council, basically, in terms of this funding. So you need to make it as clear to them as possible why you're entitled to the money, how you're going to spend it, and why it's going to keep your business afloat on the other side.
So that's really interesting that two restaurants that might be exactly the same but are in two different boroughs might have completely different opportunities from the government. So I guess figuring out your borough, which you should know, and going onto the website and seeing what you can apply for, and kind of taking your time and understanding who, as you were saying before, who is the audience, and applying there. I didn't realize that each local council divided it differently. I think that's very interesting. And do they have advisors in each council that might be able to help you?
Yeah, so just to be clear, there is a pot of money that is what the Chancellor Rishi Sunak has announced, which is very much fixed. So the criteria is fixed. So for example, with a restart grant, if your rateable value is over £51,000, then you are entitled to £18,000, and that's it. But most councils also seem to have an extra bit of money for COVID relief for hard-hit sectors that is over and above what everyone is entitled to. And that pot is the pot that is being split quite differently at the moment. And the thing I would say is every council is doing it at a different pace. even within London, I work with some clients who are in Lambeth, for example, and they've probably had about 2 or 3 rounds of kind of small funding applications that you could put through, whereas in the city of London it's only just started. It's only in the last 2 months that a recovery grant has been open for application, for example. So it varies a lot, and things will keep coming out in dribs and drabs as well. So one of the good things to do is to sign up for the local council newsletter. You'll get a bit of spam, but you'll also get notification when the application comes in. And in terms of advisors, I would say calling your council. They normally will have someone who'll be able to answer some questions for you. Everyone is feeling their way through this, as one can imagine. A lot of them have appointed external advisors to help them out as well. So I'm not going to say it's going to be easy, because it won't be. You're dealing with local councils after all, unfortunately, but they will do their best to help, and I think that's all you can ask for, really.
And I think when it comes to the possibility of getting money at the end of it, or some kind of relief at the end of it, I think it's something to kind of try and sign up to that newsletter, check that website regularly, make sure you're registered on the website as a business or as hospitality, and make sure that you're going to the right place to find that information. And interesting that you said that each council is on different timelines. Not each council, but a lot of councils are on different timelines. So maybe if you haven't had anything yet, to keep on checking. I think that's important.
And definitely, check regularly, because there are often deadlines as to the last date of when you can put in an application as well, for kind of regular funding as well as discretionary funding. So if you're trying now to apply for something that related to kind of March last year, you may struggle, for example.
No, of course. And okay, fantastic. That's really interesting. And this was an interesting one. So if you are a hospitality operator, you've already got a bookkeeper or an accountant. Do I really need anybody else to kind of help me during this time, or throughout my time owning a business?
I love this question. My favorite answer is, you probably have a head chef in your business if you sell food. You probably also have a sous chef. You probably also have a CDP. In the same way, you probably have a bartender, but you probably also have a bar back. So yes, you have a bookkeeper or you have an accountant. That doesn't necessarily mean that you don't need anyone else. What I do, I'm a finance director. That's how I work. What I would say is that I spend all of my time looking at the future. If I'm looking at the past, it's because I want it to inform me of the future and the future of your business. Bookkeeper and accountants, they vary in their experience, they vary in their ability to support you. And I'm not saying there aren't, fantastic accountants out there who can deal in the strategy side, etc., and give you advice. But bookkeepers and accountants tend to be more historically focused. They tend to be more transactional based, particularly bookkeepers. They will make sure that your statutory requirements are completed, your annual accounts, all of those things. The money has come in, it all reconciles, all of that stuff. What they don't necessarily always do is review your financial results and tell you how you can improve. They don't look at the future in the same way, cash flow forecasts, unless you specifically ask them to do so, to see where your business is going, where you expect it to go, and therefore whether or not there are any opportunities for expansion, whether there are any risks coming up, whether or not you're going to run out of money at some point and, and need to get another loan, whatever that might be. And also just to give you advice on matching up your future goals with your business decisions. It's kind of, what is the correct funding route, for example, what investment decisions you should make. So, one of the things that's quite a useful example is, if you're planning on selling your business in the next 12 months, for the sake of argument, you probably are not going to spend, unless there's a very good reason to, you'd think very carefully before you decide to spend £5 million on a state-of-the-art kitchen. State-of-the-art kitchens don't cost £5 million, by the way, but you're probably not going to do that, for example. And it's those kinds of things. It's also, someone to sit there and challenge your business decisions, whether or not, if you're planning on opening a new site, should you be doing that? If you're planning on, I don't know, creating a whole new concept, what does it make sense? What is using that financial data to kind of either validate or invalidate your plans, basically. Does that make sense?
100%. It's so the hospitality operator is the one with the passion, is the one with the ideas, is the one with the the hard graft that they put into and the love that they put into it. But I think it's worth having someone that says, that's a great idea, but this is about to happen, or historically this hasn't gone well, so I wouldn't push into it again. It kind of not keeps you accountable, but keeps your feet a little bit more on the ground. And I think it's very valuable, especially now with COVID happening and hospitality reopening, is to have kind of someone who can keep you thinking about finance and thinking about how to kind of keep your restaurant open, keep your restaurant running, and keep it safe in a way. So no, that's a really, really valid point. And I think also just having someone who is kind of understanding the numbers. I mean, my family and I used to own a restaurant, and we would do the bookkeeping with an accountant. We didn't understand, what was happening. We didn't understand, everything with the taxes and everything with financial reporting and people who come and check your books, and it gives you a bit of a panic. Having someone there who actually understands everything is hugely valuable, and I think that's more than just a bookkeeper or an accountant.
Yeah, I think it's a bit like a mentor and a bit of a financial sounding board. And in your scenario with your family restaurant, you probably know how much money you were making at the end of the day, what profits were, what sales were. That's probably very easy to understand and also to grasp. But what is less easy is probably how you can make that number bigger. It's going into the nitty-gritty of the detail of all of those individual costs and going, yeah, if you just move this by, GP is a great example. If you move this by 0.5%, you'd earn another X amount of money. And being able to say those things and translate them into actual actions that you can take to go and improve your profits, that's the valuable part.
100%. I mean, when we were working there, it was a very much day-to-day kind of finance happening. So, okay, today we made this, we made enough, to be open and to stay open. That's great. We've made enough to pay everyone. We've made enough to pay for the food deliveries and all of that. But there's no forward thinking. Hospitality is so kind of fast paced that it's very difficult to have the headspace to kind of plan anything in the future. And that means you miss a lot of opportunities to kind of find better suppliers. You miss a lot of opportunities to kind of try out different, um, lots of different things, because it's just so fast paced. And at the end of the day, the last thing you want to do is a whole finance plan. I'd rather kind of sit, have a coffee for an afternoon a month, and speak to someone who actually knows what they're doing, instead of instead of someone who has a passion for hospitality and cooking and everything. But I definitely don't have a passion for maths or uh, or finance. So I think it's incredibly valuable. And yes, the bookkeeper accountant keeps you kind of on the day to day, but what is the vision for the future? What are your possibilities as well?
Exactly. And it goes all the way to, being able to take money out as a dividend if you're an owner of a business, as well as expanding, as well as, whatever those goals may be. It's very helpful. And I think, sitting down with someone for half a day every month or whatever that might be is valuable because it forces you to do it. It forces you to engage with the numbers and the financials and the health of your business in a way, that I know operators go at a million miles a minute. There's always 27 more things that you can be doing instead of looking at a spreadsheet. I know that. But having that time to say, okay, every last Friday for between the hours of 9 and 12, we're going to sit down and all we're going to think about is the health of your business, where it's been, where it's going. And that in and of itself has value, I think.
Fantastic. Well, thank you so much for answering that. That was really clear. Kind of bouncing off from that, how would you know who to turn to? So how would you choose your financial advisor?
It's got to be, I think it's got to be someone who you like. That's important. Ultimately, we're all people, and operators especially, are people. So, you've got to choose someone who understands you, someone who understands your vision for your business, and also someone you trust, that I don't know about you, but I think, everyone kind of knows quite innately when you meet someone quite often, whether or not you've got that innate trust in that person that they're not going to steer you wrong. It's silly for an accountant like me to be talking about gut feel, but it is, there is a certain part of it. Understand their qualifications, understand their experiences. Of course you should. Hospitality businesses they're very simple in that you get sales in via selling food and drinks to people, offer service, and the costs are very obvious as well by and large. But the ways in which hospitality businesses make money and the margins within it are narrow, as we all know. So having someone who works within the hospitality industry and has worked within the hospitality industry, I think, is really important. It means they speak your language. It means they understand, they can suggest actions you could take to improve your profits as well. So that's another part of it, I would say.
And absolutely, anybody who you work with, you need to like them and trust them. So I think that's a really important quality to have. And yes, I mean, finance is universal, but I think finance for hospitality is important, and I think it's important that they have that kind of background and have a good portfolio as well of hospitality clients.
Yeah, absolutely.
Thank you for answering that surprised question. Sorry.
No.
I'm just going to check the chat to see if there's any further questions, and they are not at this time. Um, is there any kind of further advice that you would like to give um, to hospitality, apart from being kind to yourself, which I think is a huge um, point, and it's a huge kind of um, thing that operators are struggling with. But is there anything that they can do, maybe to kind of maybe what their KPIs should be on a weekly basis or on a monthly basis? Would you be able to share with us?
Yeah, of course. So I think in terms of KPIs at the moment, I would choose things that are comparable regardless of your level of sales. So one of the things that we've obviously spoken about a lot is that capacity is changing all the time. You know, if you want to compare something to 2 years ago, for example, capacity is different. So anything, you know, if you're just looking at a pure sales figure number, for example, there's no point in comparing like for like. But if you look at it from a average spend per head perspective, then that becomes something that is comparable both week on week, month on month, as well as year on year as time goes by. So that, you know, that is something that's quite useful. I think percentage capacity, which is something that you don't really normally think about, but you know, how, you know, there's a kind of phrase called sweating your assets, and one of the things that you want to be doing is sweating your assets as much as possible. You know, you're paying generally a fixed cost for your rent and your bricks and mortar premises, so you know you want to be utilizing it as much as you can. So whatever that capacity might be, it may not be 500 covers as it normally is, it might be 250, but are you at near capacity all the time, you know, and trying to maximize all of your day parts so that you're at capacity as much as possible throughout all parts of the day when you can operate, is going to be another quite good KPI to look at. And some things don't change, you know, like gross profit margins will always be a great indicator. You know, sales are, you know, people say, you know, sales is vanity and profit is sanity, you know, and it's true, you know, and your starting position of your profit is your gross profit. It's not your sales. Your sales don't actually, you know, your sales can be 100 million. It doesn't matter if it costs you 120 million to make those sales of 100 million. You're not doing anything.
Yeah,
So,
even I
you
know
know,
that's bad.
yeah, so you know your gross profit is a great starting point as well. So you know, I think keep it simple. You know, don't try and go for any newfangled crazy thing. You know, it doesn't need to be. You know, you're trying to make sure that you are making as much profit as possible and you're utilizing every bit of space you've got for as much time as you've got, you know, within the powers that you've got. So you know, just keep it simple so you'll keep doing it so that you can keep making the right decisions. What's much worse is if it's so complicated that it takes you a day to do it, you do it once and never again.
Absolutely, and that's a really really valid point. Just to kind of wrap up, I mean, we were talking about small wins that you can have with finance, and something that Restaurant Collective has, which I've neglected to mention at the beginning, is an incredible deals marketplace, and we are talking to suppliers on a daily basis on how to get cost reductions for our members. And we've got even things like electricity savings, gas savings, uh, post savings, um, lots of different things, because we're using the economy of scale. So we're saying, look, we have a whole membership group of people. You know, it's bigger than trading with a group. So what can you do for our members? So that's the advice I can give from the Restaurant Collective side: is check us out, see if there are any deals that you're interested in, because they offer a lot of savings. Actually, one of our deals saves you exactly, well, a little bit more than how much it costs being a member, which kind of, that's pretty good. So yeah, I will share our link in the group so that you guys can go and check us out.
Yes. And I think, what was I going to say? My last top tip is to check your direct debits, you know, in the same way that you should be looking at, you know, deals, you should also be looking at things that you pay for on a regular basis that you don't need anymore. You know, whether or not that's, you know, if you've got a gold package on something, you actually only need the bronze package, or whether or not there's a system that you haven't used in 12 months, you know, in 3 years because it was obsolete, but you're still paying for it, that kind of thing. And a last little plug, I do also have a deal on the deals marketplace. um, so we go full circle, Isabella. It's almost like we planned it, except we didn't, because the deal is that I do business plan reviews, whether or not that's you want me to help you write it, or whether or not you got it and you just want to be able to just have someone look at it and challenge some of those assumptions before you send it to the lender, whoever it might be. So I've got a deal on the deals marketplace for a business plan review as well for the moment. So
Fantastic. And thank you so much for offering that deal to our members. And I think the direct debit thing is a huge valid point. They, when you work in hospitality or even just day-to-day life, because I started auditing my direct debits from pre-COVID, and I was paying for some stuff that I'm definitely not going to use during COVID. So definitely having just maybe a quick audit of what you're paying for. Are you using it? Is it useful to me right now? Can I suspend it for a while? I've become great friends with the owners at Platform, and they were paying a ridiculous amount for their internet because it's a gaming venue. And so they were able to pause the whole thing because their provider offered that. But so see what your provider can give you. Maybe instead of having to cancel and paying a cancellation fee and all of that, maybe they also have offers due to COVID, thanks to the government, because the government's probably helping them too. So having a quick audit of everything is probably a very good idea.
yeah.
Oh, well, fantastic. Thank you so much again for joining me, and it's been a massive pleasure. And thank you also for all your advice, and I look forward to speaking to you soon.
It's an absolute pleasure. Thanks for having me.
Thank you so much. Have a lovely evening.
Take
Ciao,
care.
ciao.
Bye.
Bye.